Hello and welcome to another edition of Marketing Waves on this Friday, the 23rd of July. So just getting into the end of the trading week, we're hearing that equities are still flying quite high after the earnings reports are basically surging in the right direction. A lot of companies exceeding and surpassing expectations, and it was quite notable and expected after, well, let's say a lot of businesses getting back on its feet and reopening in the second quarter of the second quarter of 2021, and it's a stark contrast from this time last year when a lot of companies were actually closing down or closing for the time being. A slight unexpected rise in weekly jobless claims in America as well, but you could say it's not so unexpected because it's not going to keep going down to zero. There are going to be jobless claims spiking here and everywhere, so now and again. So let's look at the DXY first of all today to see how that's affected, and look at our Elliott Waves program. So we've got our ending diagonal here, which seems to have completed this minor wave 5 of primary wave 4. That was, we went up to roughly about the 232, 261 of the Fibonacci extensions of waves 1 and 2, of minor waves 1 and 2, and now we're progressively just coming back down. We're expecting a move to the downside in primary wave 5, and it could be a 1, 2, 3, 4, 5 pattern to the downside there. That's going to complete this cycle wave C. We completed cycle wave B a while back, so this is the next pattern in line with the Elliott Waves forecast that we have. Just look at some signals now to see if we can really cement a downside move. Well, nothing too much in the way. You could say when we had this double top here, just zooming a little bit, when we had this double top here, we had a slight bearish divergence. I'll just point that out for you. We had this slight bearish divergence coming to the downside, so that was possibly the most recent divergence we can put a mark on. But apart from that, everything seems to be moving in the same direction, so we're just looking to see what the next signals are going into the next trading week. We'll keep an eye closely on the DXY because it is quite a valuable source of interest when we're checking these wave analysis. And just on the euro dollar as well, looking to complete this, we looked like we have completed this minor wave 4. Now we're moving down into minor wave 5, going to this 117 region as well. We had the scenario that it was a flat before, but if it does drop below this 0%, the 117, then we're looking like it might turn into a double zigzag. So it could be a case of that kind of multi-structural move to the downside as well. So we're expecting this. It looks like we completed this end diagonal in wave 5. And the minute degree waves have been completed as well. So we'll see what the next patterns are for that structure. And let's just take a quick look at the signals as well. So we had previous signals before, bearish signals to start bringing the prices down. I was looking for other bearish signals as well to complete this downside move, but nothing too much in the way of divergences. Obviously we have this pattern here which seems to be converging, and you could say there was a slight divergence there if you take into account this move here, but if we do get another move to the downside, there could be more of a full-on divergence that could bring us even lower. So just something to look out for in the next few trading sessions as we cap off the trading week. So that's all from the Marketing Waves today. As usual, if you have any of your own outlook or any Elliott Wave analysis that you'd like to share with us, please feel free to add it to the post. We're always open to other suggestions, and we like to talk about it in our Elliott Wave community as well. So feel free to add that to the video, and we'll speak again on Monday. Have a great trading day ahead, and most importantly, have a great weekend ahead. Bye for now.